Welcome to this week's Market Update, where we review the key developments shaping markets, highlight what drove our recent performance, and look ahead to important events on the horizon. Let's start with the week's biggest story, that being the Federal Reserve, which held interest rates steady and kept its focus squarely on the incoming data. The Fed left its policy rate unchanged at a band of 3.5 to 3.75% for the fifth consecutive meeting, with Chair Kevin Warsh reaffirming the commitment to restoring price stability. Markets read the initial decision as keeping options open rather than signaling a change in direction. And attention now turns to inflation and jobs data arriving ahead of the September meeting. For portfolios, this environment continues to favor quality companies with durable earnings and pricing power. In the bond market, longer-term yields kept moving higher, with the 30-year Treasury yield reaching its highest level since 2007. That reflects a resilient economy along with expectations that rates may stay higher for longer at the long end. The constructive side for investors is that higher yields improve the returns bonds can deliver over time, and they reinforce why we manage duration carefully and diversify our sources of income. And in technology, Microsoft delivered a standout quarter. Azure cloud revenue grew by 43%, its fastest pace since 2022, and annual Azure revenue crossed $100 billion, all while capital spending came in below expectations. It's a clear evidence that major AI investments are generating measurable returns and also reinforces our confidence in leading companies with scalable AI platforms. Now let's turn to what drove our performance and why we remain confident in our current positioning. Alphabet was a key contributor, gaining well over 5% as investors responded to continued strength in Google Cloud and accelerating enterprise AI adoption. While the company reaffirmed elevated spending on AI infrastructure, the market saw that investment as fuel for long-term earnings growth. With momentum across cloud, digital advertising, and Gemini AI, Alphabet remains one of our highest conviction growth holdings. The communication services sector led our performance, driven by Alphabet's gains and growing confidence in digital advertising, cloud computing, and AI-enabled business models. Looking ahead, earnings execution and enterprise AI adoption should remain the key catalysts for the group. Our quality strategy outperformed among styles, as investors favored companies with strong balance sheets and resilient cash generation. Apple is a great example of this, gaining well over 5%, and holdings like Microsoft continue to fund major AI investments while also maintaining profitability. When markets get uncertain, quality tends to shine, and that's exactly where our portfolios are positioned. Looking ahead, next week brings a fresh read on the economy, so here's what we're watching. Monday brings the monthly survey of American manufacturers, covering new orders, production, and hiring. Recent reports have shown the factory sector expanding for 6 months straight, an encouraging signal for economic momentum and an early tone setter for the week. On Wednesday, we'll get the companion survey, which covers the services side of the economy, everything from healthcare to travel and dining. Since services make up the bulk of economic activity, it's a timely read on whether demand is holding up as the Fed works to bring inflation back to target. Then on Friday is Jobs Day on both sides of the border, with the US employment report and Canada's labor force survey released the same morning. With the Fed watching the data closely ahead of September, these are next week's most important numbers, supporting everything from consumer spending to corporate earnings. As always, we remain focused on helping you reach your long-term financial goals. Thank you for joining us, and we'll see you next week.